Back here on the Happy Hour, and we're joined now by our main man, Steve Moskowitz. Hello, Steve.
Hello, and I'm so excited. I get to talk about tax today. I'm just all warm and fuzzy inside.
2 tax stories.
Not one.
I'm in heaven.
It's never happened before, you've said. It's right in your wheelhouse here. So the first tax story is the baseball tax. They call it the CBT, or the luxury tax as we kind of know it. If a team has a payroll that goes through the roof, they got to pay penalties on that. If the Giants are going to get this guy right here that's on my shirt, Giancarlo Stanton, it seems like they're going to bust through that tax, and then they're going to have some penalties. How do you see it?
Now I'm going to give you a lawyer's answer.
Okay.
It depends.
Oh, okay.
Just like with tax planning, I mean, basically we have rates that can be non-existent or 20% or going up to 55 if you really spend a lot of money. So what you have to do is tax planning. You see, how can we move things around so we don't get hit by the tax? And that's what we're going to do. Do we have some trade where we get rid of some guy? What can we do? That's a big part of this tax. Now, obviously, the business part comes first. If the guy is going to make you way more than the tax, last resort, okay, you pay it. But again, as a tax attorney, that is the absolute last resort. You look for planning ways around, and that's what they're doing right now, to try to plan around this and not get hit with the higher amounts or get hit at all. And it's also going to depend, if they give up guys, how we're going to allocate the system, like the reverse of the panda. When you said, hey, we're doing minimums because the other team is paying for them, so can we do that? And that's what's really going to happen with this.
Well, currently, if things stand where they are, and they go out and make this trade, we've heard the reports that they're going to go out and maybe get not only Giancarlo Stanton, but D. Gordon, who also brings a lot of money with him. That'd be even more money. So the threshold, the tax threshold, is at 197. They're about 10 million within reach of that as we speak. If you add these two guys, you could be talking upwards of 240, 250 million. Now, what people don't understand with this luxury tax system, since the CBA in 2016, the first penalty is 20% on every dollar. Second time is 30%. Giants have done it now 3 straight years.
50%.
So now it's 50%. So tell people exactly what kind of money we're talking about extra that they're going to have to pay in just tax.
It's incredible.
Well, that's the right number. It would be incredible. But again, worst case, if they can't do tax planning, it's like right now in the office at the end of the year, what we're doing is saying, what can we do now to go ahead and save the taxes? Like, for example, in taxes, you're paying something extra, so it comes off your taxes this year. In baseball, they're doing the opposite. What kind of deals can they strike? And I'm sure their guys are in some office right now saying, how can we, I hate to use the word manipulate, how can we change what we're doing to bring this down?
Sure.
Now, in the other tax story we have for you, it's regarding the new House tax bill that was passed last week. It's going to impair college sports. Athletic directors are freaking out because currently people can buy basically like PSLs in the NFL. They give a tax donation for the right to buy a season ticket. And it can be upwards of,
right?
And then they can deduct 80% on that. But this tax bill, this new House bill, would take that away. So people that are regularly donating upwards of $4,000 just to buy the season ticket, and then they get to write off 80%, right? It's a great deal for them. But if that goes away, you're talking about millions of dollars lost for college programs.
If those people are watching right now, and I'm sure they are, do not bite your fingernails to the elbow.
Okay.
Because in the Senate version, they took that out. And there's going to be a lot of horse trading, so that's one thing. But let's take the worst case. Let's say the House version passed. Well, then, once again, it's like tax planning, where you say to somebody gently, so it's not implied, but, okay, look, you want these seats? We're happy to sell them to you. However, before we'll consider allowing you the seat, wouldn't you like to make a nice charitable contribution to us? And then I'll decide if I want to sell you this or not. That would be the way around it. Because, for example, if I went to the school and I said, you know what, I'm feeling very generous today. Here's a check for the school. Use it for something. I don't want anything in exchange. That's a tax deduction. Then I say, you know, while I was hanging around, boy, you guys have a really nice stadium here. I have another check with me. Could I buy a seat? They said, why, yes, you could. And that's how you get around that.
It's just not a requirement. You're asking people to just be good humans and help the...
And I'm sure that people will work... Well, of course we're good humans.
We're all good humans.
We're great, well, at least the people here at this table. But that would be the way around it. So that one isn't as worrisome, even if it would pass.
Okay. All right, interesting. A double dose of tax.
What an exciting... I don't have to go yet. That's not the two out, is it? I mean, I was just getting started.
I know. We don't have a third tax story, though. We couldn't come up with a third tax story, so I'm sorry.
The answer is it depends, because you might be making charitable contributions and giving them away. and taking a tax deduction.
Yeah.
Eating a turkey?
If you're eating with a client and you paid for it, maybe so.
Don't eat it. Steve Moskowitz,
always a pleasure.
Always a pleasure.
Especially with tax. So exciting.
We'll do that next time as well.
Okay, good.
Thanks, Steve. Everything is taxed. Thanksgiving is taxed. Giancarlo Stanton. Taxed. But could they get him? Or maybe the Babe Ruth of Japan.
Ooh.